Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport and this is your Dairy Week in Review for October 31st, 2014. So to get started here, let's take a look at where our CME dairy components settled at the conclusion of this week's trade. It was kind of a mixed week, but positive overall. Blocks finished the week at 214 even, unchanged, but barrels really rallied pretty sharply here and settled at 211 even, up 18 3/4 cents. We saw barrels come up to get more in line with where blocks were trading at. Cash butter had a solid up week overall as well after an ugly couple of weeks before this. Cash butter settled at 189 even, that's up 8 cents on the week. November whey settled at 59.5, down 2 cents, and November non-fat dry milk settled at 141.5, down 3.5 cents this week. Class 3 futures were positive overall on the week as well. November futures settled at $21.95. That's a gain of 46 cents from last week's settlement. And December still unable to close the week above $19, but did gain 36 cents from last week's settlement. That now puts our 2014 average price at $22.38. That's down 2 cents on the week here. And our 2015 average price is right around 17 1/4. So that's actually up about 25 cents or so from where we were at last week. So it was a decent week overall between last week and this week for 2015 as well. Now let's take a look at what we've been seeing in the spot cheese market here recently. So here, this is a weekly chart of the block barrel average, and you can see that there's been a lot of damage done over the course of the past several weeks from our record high here when we were at about $2.45 a pound. We got one major pullback here, then a little bit of a bounce back, and then we sold off through the end of last week. But this week, though, we were able to gain a little bit. The buyers seem to return to the cash market at these lower prices and really continue to bid prices higher, specifically barrels, as I mentioned earlier, which are holding a pretty significant discount to where blocks were at, rallied over 18 cents this week to narrow that spread, and the block barrel average finished the week with a 9 3/8 cent gain at $2.12.5 a pound is the block barrel average. So cash cheese prices are still holding up very nicely despite all the headwinds working against this market, all the bearish sentiment in the marketplace, but cash is still holding up. Now, when we get into new bear cycles within the milk market, cash cheese really tends to lead the way. We don't really often see bear markets start with the deferred months. Normally, you're going to see the cash market lead the way because at the end of the day, the cash market is really what's going to drive those Class 3 prices. And we're seeing that when we look at the Class 3 market here because November milk is still well above the $21 level, whereas you go out into 2015 and a lot of those months are struggling to stay above $17 and some are a little bit below $17, and that's pricing in over a 30-cent pullback now on cash cheese. So really what we'd have to see for the cash market to go down and get in line with where 2015 cheese futures are trading at, we need to see the cash price drop over 30 cents down to about $1.75 a pound or so on average is where those 2015 cheese futures are pricing in. So it seems like the market right now is anticipating a lot of downside in the cheese market, but for the time being it's holding up pretty nicely, and we saw almost a 10-cent gain here this week, and we're really just getting into the highest demand time of the year as we get closer to the holidays. So really, I could make the argument for things to go either way here. Now let's take a look at what we've been seeing in the spot butter market. So here is a weekly chart of spot butter. Now you can see that 2 weeks ago, that was the big 80-cent sell-off that we saw all in 1 week here. And then we were down last week as well, but you can see that we kind of rebounded here today and posted a bit of a bullish weekly reversal on cash butter. Overall, butter settled the week at $1.89 a pound. That's up 8 cents. You can see here, unlike cash cheese, cash butter really just screamed right down to get in line really with where butter futures prices are trading at for the majority of 2015. Here, and that's represented by this blue line here. On average, those prices come in at about $1.74 a pound, and we got pretty close to that level here at the low, and then we rebounded. So now the butter market is for the most part in line with where 2015 is priced at. So I think from this point forward, if we get some upside on butter, that should help to support those 2015 butter prices as well. But on the other hand, with there not really being a buffer zone anymore between where the cash market's at and where futures are at, if cash butter starts to sell off again, it's really probably going to drag those futures down along with it since there is no discount priced into the future. Now let's shift our gears here over to Class 3 futures. So here we have a continuous second month chart of Class 3, and that is still the November contract here, and this is a weekly chart. So each bar you see on this chart represents 1 week's worth of trade on that second month contract. Now November will be rolling into the front month spot next week here on Tuesday, and that means that December will be assuming that leading second month roll here, and we'll be rolling on to this chart. Now, Class 3 futures, not surprisingly, very similar situation as I just went through with cash cheese. Now, Class 3 prices had a solid week overall. The November contract rallied 46 cents, mainly finding support from the higher cash cheese trade. Now, November milk is still well above that $21 level, but when you go out into 2015, as I mentioned earlier, some of those contracts are just below $17, so the Class 3 market is still extremely inverted, meaning once you go out into the future, those contracts already have a ton of downside already priced in. We're talking over $21 milk in November to under $17 milk once you get out into the April-May contracts as of today's close. So when we look at where the average 2015 milk contract is priced at, you can see that there's a massive amount of downside priced into the market because the market's already taken into account all the higher production that's being anticipated, the lower exports that are being anticipated for next year. A lot of that negativity and a lot of those headwinds are priced in, and that's why when we look out into 2015, the average Class 3 price is right around $17.25 now, and that's shown by this horizontal blue line here on the chart. This is showing us right where the average 2015 futures price is at this blue line. Now you can see we're over $21 here on the continuous chart, and you can see just the size of the discount that's priced into this market, and you can see that when we look at this chart here where 2015 contracts are at, it's at a major long-term support level on the chart here. So it's already pricing in a move down to this long-term major support level, and I think it's taking into account again all those negativities that you're hearing about. A lot of that's already priced in, so I think when you're thinking about next year's milk, it's important to think about where those prices are at out into the future and how much of a sell-off they already have priced in. So there's already over a $4 hundredweight sell-off. Now that's been narrowed a little bit here. Just a couple weeks ago, there's over a $5 sell-off priced in. So as we look at this here, that forward curve is very inverted, and over time what we typically see happen is we see that forward curve start to flatten out, and what that can mean is that those back months, those deferred months, can actually start coming up in price to get more in line with where the nearby months are at. And at the same time, the nearby months can even sell off as the back months come up to flatten out that forward curve. And we've been seeing some of that happen. Our average price is up. Just a week or two ago, the average price for 2015 was only around $17. Now we're at $17.25. So we may be seeing some of that kick in already. And to go along with that here, we need to be taking into account seasonality. So seasonally speaking, Class 3 prices tend to find more of a seasonal low in that October time frame. And then as you head through the holidays right into the end of the year, you can see more of a seasonal upswing. So that means that we could possibly be at a pivot point right now, but we are probably also at risk of maybe seeing more of a counter-seasonal sell-off. That is always a risk. So something to keep your eyes on as we get through the holidays here, or I should say head into the holidays. If we really start to see buying pick up in the cheese and butter markets, that could be something that supports that normal seasonal move higher out in those 2015 contracts. If we don't see that seasonal buying kick in, we may be more at risk of a counter-seasonal move lower. So I think right now it's just important to note that I think the possibilities are all over the board, and 2015 already has a massive amount of downside priced in. We're already at this downside major long-term support level here on the chart. Well, that's going to do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thanks for watching and have a great weekend.